Hi everyone, happy Friday. I'm Ricardo Gonsalves and this is On the Money from the SBS Newsroom on this Friday, the 28th of August 2020. It is your daily 10-minute business and finance wrap. Today it'll be a little bit longer because we've got two great feature interviews. One is with Boral CEO Zlatko Todorchevsky and the second Harvey Norman chair, Jerry Harvey. But first, let's go straight to the share market. The S&P ASX 200 today down by 0.86%. It follows comments from the US Fed Reserve Chair overnight, which we'll tell you about in a minute. It actually sent the Australian dollar lower immediately afterwards, but the Aussie climbed throughout the day and reached above 73 US. That is an 18-month high. We did see some gains in the banking sector, but they were offset elsewhere. The likes of BHP, CSL and Wesfarmers finished lower today. And for more, I spoke earlier with Jessica Amir from Bell Direct. Jessica, what drove the market today?
So today was all about Jerome Powell, the Federal Reserve Chair's speech, which basically said that they're going to provide further stimulus. They're going to allow inflation to rise above their target and keep interest rates lower for longer. Now, because of that, we saw safe havens lose a bit of shine. Gold fell 2% and Treasury yields rose, really, as investors sold out of bonds and poured into equities. Now, we saw this in the US overnight and we saw this in Australia today. Financial stocks outperformed in the US overnight. JP Morgan, American Express galloping ahead, and that pushed the Dow Jones briefly into positive territory for the first time since COVID-19. And what did that mean for us? Well, today we saw cyclicals come into favour as well. Financials and REITs, the only two sectors making a profit today. The rest were basically falling at the hands of profit taking.
And profit reporting season continued. Which ones were you following and caught your attention and why?
Well, it's been the busiest week for reporting season. 35 companies released results this week. Most met or beat expectations. Tech stocks shone the brightest. Utilities, energy really disappointed. In fact, we're just about to wrap up reporting season. 237 companies reported so far this season. 44%, the majority, in line with expectations. About 40%, a nice surprise. 17% didn't really cut the mustard. What was interesting, though, companies that outperformed are seeing a rise in revenue, with us all spending more time at home. Smarter investors are, of course, taking advantage of this structural shift. Stocks that outperformed really focused on online shopping, online gambling and online education. For example, Afterpay, PointsBet today, their shares charged up over 80%. Another online gambling company, Jumbo Interactive, also did well, with more of us spending more time gambling when perhaps some should be working. With the fall of public transport use and the rise of car tinkering, Bapcor is also doing well. On the downside, though, this reporting season, it's of course been disappointing for commercial rent collectors and landlords. Vicinity centres and Dexus, for example, they're under delivering. Of course, not able to guide what FY21 holds because less people are in the city, less rents, and of course less vacancy, particularly in Melbourne. On top of that, death rates, they're actually under their 5-year average. Now, this is a good thing. We're all taking better care of ourselves, but it's not so good for funeral businesses.
Jessica Amir there talking about the share market. She's from Bell Direct. Let's go straight into profit reporting season. Building product supplier Boral posted today. Shares did rise 2.3%, even as it reported a $1.14 billion loss and scrapped its dividend. It has a new CEO. He's been in the job for only 8 weeks. His name is Zlatko Todorchevsky, and I spoke with him a little bit earlier today. Zlatko, this financial year was a tough one for Boral, even before COVID-19, because of the floods and bushfires. How would you describe the past 12 months?
I think it's a great question, Ricardo. It's been quite challenging for a range of different reasons. As you mentioned, we encountered in Australia bushfires and floods at the start of the year. Then we rolled straight into the impact of coronavirus right across the globe, which obviously nobody expected, and particularly expected to the degree that we saw. And then, around the last 12 or so months, we've also had softness, particularly in residential in Australia. So it's been a very, very challenging 12 months. But we're looking forward to FY21 and seeing what that brings.
You've only just taken on the reins as CEO, so what kind of a stamp do you want to put on the business?
Well, there's a couple of things we're focused on at the moment, Ricardo. So one is, the business has probably not delivered on our expectations or the market's expectations over the last 2 to 3 years. We're doing a very detailed review of the portfolio to make sure we understand the performance of every business, whether it's Australia, the US or Asia, what the potential of those businesses looks like, and then how we organise ourselves for success. So my focus in the very short term is to make sure we complete that review over the next 2 months and then tell the market about what the business is going to look like, and to be frank, then get on with it and start executing with urgency.
What concerns you the most about the current economic environment?
It's probably the most uncertain economic environment I've ever operated in, Ricardo, to be frank. And people have asked me, what's the outlook for the next 12 months? Honestly, we don't know. We are literally managing Boral on a quarter-by-quarter basis at the moment, thinking about where we've got visibility, how do we respond to those issues or opportunities that get created, and then roll into the next quarter. That's literally how we're managing it. And look, I'd love to see some good news coming down the turnpike, but the messaging, particularly in Australia, is quite uncertain at the moment.
Now, the business is closely linked to the housing market. This week we saw the biggest annual fall in residential building work done in around 19 years. What are you seeing in that sector?
Yeah, once again, I think it's really mixed, Ricardo. So if I look at our experience in our last financial year ending 30 June, residential construction went down 20% in Australia. It was 25% in New South Wales, and it was even higher in multi-residential. So if you think about the Boral exposure, we have a heavy weighting to the East Coast and a particularly heavy weighting to New South Wales. So the markets that we're exposed to have gone down and have gone down quite substantially. There are some early signs of maybe some positivity in, say, regional Victoria or South Australia or WA, but they're not markets that Boral has a large exposure to. The ones that we really focus on are New South Wales, Metro Victoria and South East Queensland, and they're markets that are still very challenged.
On leadership, how important is diversity, especially in senior leadership and the board level? Because if I'm not wrong, I think that you're relatively evenly split when it comes to gender diversity on your board.
Yeah, look, gender diversity-wise, the Boral board is very balanced, and I would absolutely support that kind of broader diversity balance. And it's not just gender, as you know, Ricardo, having people that have got different experiences, who have spent time living or working offshore, all of those experiences add to the richness of the conversations and debates you can have. So gender diversity is absolutely critical. I'm very pleased with what I've experienced in my first 8 weeks working at Boral, but we're looking to build a really diverse business going forward.
Zlatko, your family migrated from what we now call North Macedonia to my hometown of Wollongong on the New South Wales south coast. Do you think having a migrant background helped you in your studies and business?
Yeah, I think it's a great question, Ricardo. Look, I don't take anything for granted. My father worked at the steelworks. My mother used to iron 500 shirts a day. I didn't grow up with any expectations, so I don't come to work every day thinking that I'm owed anything. And I think that work ethic for me is important, the fact that I don't take anything for granted, and I try to do an honest day's work and do the right thing by the business. I think that stood me in real good stead both when I was studying as well as the way that I've operated when I've been in business.
And what would you say to other migrants, especially looking to climb up the corporate ladder?
Look, just back yourself. If I think about 21st century Australia, it's the kind of environment where it doesn't matter who you are, what your background is, what your preferences are. If you want to really have a shake and make the best of it, then Australia is a great opportunity for anybody.
Zlatko Todorchevsky there, the CEO of Boral. Another company which reported today, Harvey Norman, which has benefited from that retail splurge as consumers look to spend while they spend more time at home. Shares did fall 1.6% today, but remember they have risen 72% since those March lows. The company posted sales growth of 7.6% in the financial year, profit after tax of $408 million, an increase of 19%. So I thought it would be a good time to speak with its chairman, Gerry Harvey. Gerry Harvey, to what extent has COVID been good for business?
Well, when it first started back in March, we were very worried we'd be closing all our shops all across the world, and things looked dire. And then suddenly we're starting to get a lot of sales in computers and freezers. And, oh, this is interesting. And then it switched to refrigerators. And then it switched to TV. And then it went to furniture. And then it went to bedding. And then they all started to sell. And then our sales started to boom. And I thought, what about this? So that happened in April, May, June, and I thought, I wonder how it'll be July, August. It's the same in July. It's the same in August. So the sales are actually going through the roof. Now, we're in 8 countries in the world, and the same thing has happened in every country that we're in, the same sort of progression of product. And we've been closed for a period of time in every country in the world except Australia, and now we're closed for a little bit in Melbourne. But when we opened those stores again in those countries, the sales went through the roof. And so we've had this magnificent result for the year. And I mean, I've looked at it and thought, I've never seen a result as good as this in 60 years in retail. I've never seen like-for-like sales go like this, expand 20, 30, 40, 50, 60% up, store after store, country after country.
But what will happen to sales once some of the government stimulus is pulled back?
Well, I was talking to someone this morning, they're talking about furniture sales in England. And they were saying that they haven't had that stimulus to the extent and the superannuation and all the thing that we've had here, and yet furniture sales over there, because people are staying at home and not going to the restaurant and going to the holiday spot and all that, sales have gone through the roof regardless. So you could say even if the stimulus didn't occur, sales would have been very strong, certainly not as strong as with the stimulus. But the fact is that the people decided I'm spending a lot more time at home. I'm not spending my money on other things like restaurants or holidays or whatever. And car sales stopped completely nearly. So they decided to spend it on their home, which is like extraordinary. I mean, we could only, we're lucky. You can't be this lucky.
So what are you seeing? Are you seeing people shopping in-store when they can, where they can, or is there still a big shift to online?
Well, what happened, when the stores are closed completely, we might do, say, 50% of our business online. That's the only business we do. Then when the store opens, it only becomes 5 or 10% of our business. The other 90, 95% goes into the shop. So that tells you very clearly that people like to buy online, but they like to buy in the shop a lot more. So if you're looking at sales in online of 5 to 10%, you're looking at sales of 90 to 95% in the store. And we've proved that conclusively. So whereas we thought maybe, you know, when the stores reopen, they'll keep buying online. But no, they didn't. They went back into the shop because they'd been denied that opportunity to go into the shop for a period of time, and they just wanted to get out of the house.
Jerry Harvey there, the chairman of Harvey Norman. That is it for On the Money this Friday, the 28th of August, 2020. Don't forget, you can follow me on Twitter at Business Ricardo. Everyone have a good weekend, and you can catch up more on the Money on SBS World News weeknights